Thanks for tuning in to your daily dose of quick real estate updates, local housing trends, and market data, plus tips, tools, and strategies to help you buy, rent, or invest with confidence. You're now getting ready with RealiCare Reports, powered by the innovation team, Cami and Rex. Now go grab your favorite morning beverage, whether that's coffee or tea, and let's enjoy this episode.
Welcome to the deep dive.
Glad to be here.
So you sent over this Zillow research piece from April 30th, 2025. Mortgage borrowers get a breather.
That's the one. Yeah, some interesting stuff happening.
Right. So our mission today basically is to dig into this, figure out what Zillow's seeing in the housing market right now.
Exactly. And what it might mean for, people actually navigating it, buyers, sellers.
Without getting totally lost in the jargon. Just the key takeaway.
Precisely. It's a good snapshot based on recent economic data.
Okay, let's dive in then. The big headline seems to be this dip in mortgage rates, lowest in recent weeks, they say.
Yeah, they've edged down a bit. It's not a massive drop, but noticeable.
And what's Zillow saying is behind that? What's causing the dip?
Well, they're pointing pretty clearly at a few economic reports that came out.
Yeah, right. Like what?
Like the fact the U.S. economy actually contracted in the first quarter.
Yeah.
The GDP report.
Right, I saw that.
And then there was the consumer confidence number for April. The Conference Board survey. It dropped to its lowest level since the pandemic started.
Wow. Okay.
Yeah, and on top of that, the ADP employment report showed, much lower private job growth than expected. Only about 62,000 jobs added in April.
Which was, what, half of what economists thought?
Roughly half, yeah. So you put those together, signs of a slowing economy.
And that tends to push mortgage rates down or at least stop them rising?
Generally, yes. It fuels speculation that the Fed might ease up or at least not tighten further.
Yeah.
So, yeah, the market reacts.
Okay. Makes sense. Zillow also flagged the official Bureau of Labor Statistics jobs report coming out May 2nd as something to watch.
They did. The Zillow piece came out just before that, but they highlighted it because every major data point matters right now. It feeds into that whole inflation, growth, Fed policy picture.
Constantly watching the data. Okay, let's talk actual numbers then, the nitty-gritty. What rates did Zillow mention in the report?
Okay, so they gave specifics. The 30-year fixed average was down to 6.61%.
And that was down by how much?
Down 0.17 percentage points.
Okay.
The 15-year fixed was at 5.9%, and that dropped a bit more, 0.19 points.
Right.
And the biggest mover was the 51 ARM. The adjustable rate one.
Yeah.
That fell 0.43 points, landing at 6.76%. Still higher than the fixed rates, but a bigger drop.
Interesting. So some real tangible movement there. But the million-dollar question, always, is this a trend? What's Zillow's crystal ball say about the future?
Well, they're pretty cautious, actually. They stress that the future path is, far from certain.
No big surprise there.
Right. It really depends on, more economic data coming in. Inflation, jobs, growth, all that stuff. Plus, any new policies coming out of Washington?
So factors we know are always in play. Do they give any kind of prediction, even a rough one?
Their forecast, as of this report, was for rates to probably end the year somewhere in the mid-6% range.
Okay, so maybe not dramatically lower than now, but perhaps stabilizing?
Possibly. But they explicitly warn the path to get there could be volatile. Bumpy, ups and downs.
Okay, so breather might be temporary. Buckle up. Got it. How is all this, the slight dip, the uncertainty actually playing out in the housing market itself? What are buyers and sellers seeing?
Well, Zillow suggests even this small rate drop can make a difference, especially if you were kind of on the edge of affordability.
Opens a window slightly?
Maybe. And they actually describe the market as becoming friendlier for buyers.
Friendlier? How so?
Mostly because more sellers are jumping in. New listings are up almost 10% compared to last year.
Wow, 10%. That's a lot more houses on the market.
It is. More inventory, which is generally good news for buyers.
But are buyers, biting? Are sales keeping up?
That's the interesting twist. Buyer activity is up too, Zillow says, but not enough to absorb all those new listings.
Ah, okay. So supply is outpacing demand a little bit.
Seems that way, based on this report. And the consequence is homes are sitting on the market longer.
Right. Not selling in a weekend with 20 offers like before.
Exactly. More like weeks, maybe longer. And that shift, it gives you, the buyer, more breathing room, more choices.
And maybe more negotiating power?
Potentially, yes. More time to think, compare, and maybe negotiate on price or repairs or contingencies.
Yeah.
A definite shift from the recent past.
Okay, that's a significant change in dynamics. So given this volatility and this changing market, Zillow actually has some specific advice for home shoppers, right?
They do, and it's quite practical, I think. They're saying, look, with rates bouncing around, maybe focusing only on the list price isn't the best strategy anymore.
Okay. So what should people focus on instead?
The monthly payment. What can you actually afford month to month? Because a small rate change can really swing that payment amount, even if the list price is the same.
That makes a lot of sense. The payment is what hits your bank account.
Exactly. It's the real measure of affordability when borrowing costs aren't stable.
And didn't they mention a tool they have for this?
Yes, their buyability tool.
Hmm.
The idea is it updates in real time. It looks at current rates, current home prices, and shows you listings that fit within the monthly budget you set.
Ah, so it connects the dots between rates, price, and payment automatically.
That's the goal, to help you filter based on what you can comfortably pay each month, which might be a more reliable target right now than a fixed list price range.
Smart. Okay. Now, Zillow also listed some related articles in this piece. Just quickly, what other kinds of things are they looking at that tie into this?
Sure, it gives a bit more context. There was one on March, existing home sales stumbling, even though rates were a bit lower then too.
Okay.
Another on a, quote, surprising jump in owner's equivalent rent in the CPI forecasts, suggesting shelter inflation isn't totally gone.
Right.
One from January showing home prices were accelerating again back then. And another from February noting sales weren't keeping up with inventory growth, which kind of echoes what we were just discussing.
So, mix of signals. Prices were up, then maybe slowing. Sales are lagging inventory. It sounds complex.
It definitely is. Lots of moving parts.
And beyond those specific related ones, what are some other recent headlines from Zillow research, just to get a feel for the broader landscape they cover?
Yeah, just scanning their recent stuff.
Yeah.
There's one saying February home price growth slowed dramatically, contrasting the January report.
Okay, showing how fast things change.
Right. There's a striking one. In 233 U.S. cities, even a starter home costs $1 million. Really highlights affordability issues.
Oof, yeah.
Let's see. Another mention of March existing home sales stumbling. A report saying new home sales actually exceeded expectations in March despite low consumer confidence.
Interesting. So new construction holding up better.
Maybe some pockets of strength there.
Mm-hmm.
They also have their regular forecasts for home values and sales. A March market report noting values flattening as sellers outnumbered buyers.
Mm-hmm.
And stuff on the rental market too, like asking rents topping $2,000. So they cover a pretty wide range.
Definitely. It paints a picture of a market that's, well, shifting. A lot of different pressures. Okay, so let's try and wrap this specific report. Mortgage borrowers, get a breather up. What's the main takeaway for someone listening?
I think the bottom line is that things are cooling off a bit.
Yeah.
You've got slightly lower rates, partly due to economic jitters, combined with more homes actually hitting the market.
Right.
And that combination is creating maybe slightly better conditions for buyers. More choice, potentially more leverage, less frenzy.
But with a big asterisk about rate volatility.
A huge asterisk,
No.
which leads back to their advice.
Yeah.
Focus on that monthly payment. Understand what you can truly afford month to month, because that's your anchor in these choppy waters. Don't just chase a list price.
That seems like really solid, practical advice right now. Okay, so as we finish this deep dive, maybe a final thought for you, the listener, to chew on. We're seeing these, subtle but real shifts. Rates down a bit, inventory up, market maybe a bit friendlier to buyers. So how might things change more if the economy stays slow, or if, say, new government policies come into play that affect housing?
Good question. Lots of what ifs.
Exactly. And what new strategies might you need, whether you're buying or selling, to kind of navigate whatever comes next in this evolving market? Definitely something worth thinking about.
Absolutely. The landscape is changing.
Thanks for digging into the Zillow report with us.
Well, that wraps up today's episode of RealiCare Reports, where real estate meets real life. For more updates, tools, and insights that will help you buy, rent, or invest with confidence, be sure to follow, subscribe, stay connected, stay informed, and stay ready. Until next time.